All right, let's jump into things. Start off with everyone's favorite one at the moment, DXY, because we're sort of seeing things that are sort of I'm reluctant to say bouncing back because it's a very slow little grind up here in that, and I think realistically any major moves are just going to be sold into. So, if we see a little bit of a bounce or push up above here, look, this could open it up to a little bit of a further sort of squeeze, but anything in this zone up over here really is primed for just a smackdown. There was a couple of things, and I called this out yesterday, I put it on X as well, because it's, negative divergence, they're my thing, particularly for the base and the reversals and that. So we had this sort of like second negative divergence sort of coming through here, as you can see, not quite as sort of violent as that first one, but we had a couple of things, and this is where confluences come into play in that, because I had somebody sort of asking me sort of like, what do you mean by this chart kind of thing, or what's the implied sort of direction? And the idea is basically, obviously, negative divergence. That's the main thing that I'm looking at. That's your reversal. But then you have a confluence of things. So you've got this little channel. We had a breakout. And as we know, with channel breaks and that, generally the retest will come deeper than the breakout point. Well, it can come at the breakout point. So around here, you could have expected maybe something. But of course, this was in the middle of Powell's speech, and this just cut through absolutely everything. So nothing was stopping that at that point. As I said, they didn't even wait, excuse me, to sort of see what he had to say. As soon as it hit 12 o'clock, bang, they were selling it down. So look, we've got the back test of the top side of this, which has come out and stopped anybody that's had their stops in this, like, lower low that's trading the horizontals. They're all been taken out along here. We've got the negative divergence and these two red lines through here. I have to get onto daily just to go back far enough. We can see these are the wicks from back in December and also back in July last year. So really sort of last lines of defense before we really are coming down to test sub 100. So let's get back to where we are here. So, we've got oversold conditions on the daily. We've got a little bit of a bounce push up here. Again, look, I don't think this is going to be sort of the sort of thing that, oh my God, here we go, we've got the bottom, because the fundamentals do ring true that, the cuts are coming, and this is what I've been saying for a long time, that it's a matter of sort of when, not if, because as the inflation drops out of the sort of main spotlight of things that they need to tackle, you then look at the sort of the strength of the economy. And, they've got sort of super weak numbers. That's also then boosted by the fact that they had these phony numbers for so long. Um, it shows the sort of state of the economy is actually quite weak. And if they keep the rates high for longer, it's just going to put more strain on that part of the market. And for what? You've already got your rates, so your inflation, your CPI, in that target band. And if you listen to the speeches, if you listen to the press conferences each time, they've been saying for a long time, look, we're not going to wait till we hit 2%. And this is important because you're not waiting for it to hit 2% and then you're going to cut it down. They're at 2.9, so 2 to 3% has been a reasonable expectation. The ball's moving, it's moving in that direction. So in theory, it may sort of keep sort of ticking down. It may sort of take a little bit more to get that last little bit if they want to really get it back down to 2%. But, it doesn't really matter for them at the moment. With a two handle, that's the main thing. Now they can start sort of looking at, okay, what's the other sort of main thing that we've got to sort of juggle, and that's a recession. And that's sort of like, businesses struggling a little bit because there's no point keeping the rates higher for longer to get this inflation down, but at what cost? A whole bunch of businesses go bust, or even more businesses go bust, or, people foreclose on their houses. There's all that other stuff you need to sort of start to look at as well. And so realistically, I think US dollar is going down further, but given these technicals on the 4 hour, given the fact that it's oversold, quite heavily oversold on the daily, I think there's room for this to sort of squeeze up a little bit before moving back down. So last week I thought you might see it through this period here with this little head and shoulders. And look, it did. It came up and tested that neckline, and this looked like it was a plausible play. And then Powell didn't even open his mouth. They flicked on the TV and bang, and it just got hammered down. So that sort of made this obsolete. So now we're looking for the lower levels, which is where we're at now. And look, I still think that the original plan of moving down here, moving up, not necessarily up to this level here, but up into this zone here, and then further down for the next leg is a plausible play. I think a lot of the market are looking at these areas here. A lot of the market are, sort of going off what Powell said on the weekend, on Friday, and sort of going like, yep, US dollars, bang, we're going to sell it down. So the pain trade then becomes the short-term squeeze of those positions of people that sort of just trade the headline, trade what they see on the sort of, the news, the talking heads kind of thing, and then they wait to react. So, squeeze those people out, take their money, then get on with the show. And this is why I believe that we've got a potential sort of little short-term up through this period with DXY. Again, look, you still got to break these levels to sort of get back up over here, but it doesn't seem to me impossible that if they decide to sort of catch a bid with the US dollar and push it a little bit higher. We had durable goods data out last night as well for the US. Not a super major one, but again, it was slightly stronger and slightly stronger economic data at the moment means that okay, economies maybe not so in dire straits as we thought. So maybe we don't need to cut. Like this is the theory, and this is the way that the people will act and react, and this is why it's important to pay attention to all these bits of news because whether that's the actual truth or not, that's how the market will react, and they'll react off the news. And it's important to know the outcomes and why and how the market will react given the certain bits of news at a certain point, given everything else that's sort of going on. And at the moment, as I said a moment ago, the number one sort of thing on their mind at the moment is recession fears. Recession fears. Okay, we need to cut. Why do we need to cut? Because the businesses and the economy is weakening. So you get data that's contrary to that, well, you're going to get a reaction that's contrary to that. And that's going to mean short-term US dollar strength. Now, again, it's not a big, high tier sort of bit of data. It's not the one that's, oh my God, this will shift the whole landscape of the market. But it is one of these little parts of the puzzle that we plug in there. And so you get a little short-term move from these things and a little sort of continued sort of relief rally. And it adds to this whole idea. You've got to start to question a lot of this news as well, because as I said, look, there's reasoning for technical reasons for this to sort of come up a little bit. Then they get a little bit of data that supports that. Okay, another little reason for it to move a bit higher. And then, eventually you'll get some bit of data out and it'll say, oh, no, you know what, that was actually sort of wrong, or it's weak, or we'll revise the numbers and on with the show, and we'll come back down here. So it's all about sort of timing and reading these sort of things with it all. So look, in the short term, I think we've got this little negative divergence that's playing out here. Take out this little line here where we've got the alerts, which is back over this little high over here, back over the lows over here, because remember, support and resistance, they're the same thing. So this is a big area, but if we could just drag a little line through here, you can see that this is really the zone that you want to sort of get above. So if you ignore this sort of green one for 1 second, you can see support. It was a slight resistance. It was found some slight resistance. You get back above this level here, where I've got the alert set, that opens up to undo this move through here. And this is where we could possibly be looking if we look at the most recent stuff. So this is the little play that I would be looking for. Well, I am sort of looking for, given if we could sort of continue to see a slight move up with DXY and sort of come through this zone over here. All right, flip across. We got gold and gold. So I caught some shorts on gold last night. From 20, I got this little drop down from like 23 to 11 or something. I just took the money, I banked and ran, and then sort of obviously you can see we come back up here, finding resistance where we've sort of seen it before. Let's clean up a bit of this chart. All right, so look, we've got it technically a lower high as it is at the moment. If you go down under this little zone here, so underneath 2507, you got that 25 round number. Fix up these a little bit. This could be definitely a little area you would see a little push down to. I'd like to get long. I do believe that sort of metals have got an upside. As I said, I do believe that this is going to be a little short-term rally on DXY, which will, you got to know how these things work together. And, as I've said 1,000 times, DXY and gold, 90% of the time, they run inverse to each other. And 10% of the time, they'll run together with each other. They'll either sell off together or they'll buy up together. So at the moment, you're seeing a little bit of an inverse relationship. So the money's pouring back into US dollar for whatever reason for a short period, and that'll give the money flows will come out of gold into the US dollar till they sort of go, yep, this is high enough, and then we'll see it bounce back up. So this to me will provide a better long entry for my overall theme with gold. I think 2600 is the price target. This is where I'm looking for gold. As to sort of where to get into that, I still think that, if we can get sub 2500, that'll sort of shake a lot of people. They'll be saying, here's a lower high, lower high. I don't think we're going to come down. Look, if you come down underneath 2470, then you've got deeper, deeper pullbacks to come for sure. But as it is right now, I would say that sort of like, a retest of this sort of 2490 to 2500 would be a decent area which I'd like to sort of be looking to get long on it, because the thing is, you'll see people trading, oh, lower high, oh, it's breaking down. Just watch the news, watch how people report it. Like they're going to be sort of fear mongering, all this kind of sort of stuff. Oh, lower highs, technicals, we break here, we're going down even further. And, that scares people. They want to get out of their position. Some people are still holding in the longs through here. Some people have got long up here and they're sort of looking to sort of, minimize their losses around these zones down here. So, that's where I'm looking to sort of really sort of get long, sort of as those people sort of freak out a little bit, get a little bit scared and go, okay, no, what, it's going down lower. I'll be looking to sort of pick up their positions as they sort of bail off and get out of them. So I think that certainly we've got upside to come, but as I said, I think DXY is due for a little bit of a bounce. I think the flows are going to come from the metals, means we're going to get better entries on the metals. And when they say, look, what we're done with sort of this idea that US dollar doesn't need a cut next month, which is only 2 weeks away or a week and a half away. We've decided that actually, yes, they do need a cut. Then you'll start to see everything sort of pick up and move on again. So I'm not looking for longs at this stage. I'm looking for longs, but at a lower level. So I'm watching to see if we get underneath 25.07 here. If we get underneath 25.07, I think sort of, sub 25 would be a good level to sort of look to sort of get some buys in again. All right, flip across Aussie. Seeing a little bit of a cooling on the Aussie now, which is fine. Again, we're seeing this sort of dribble its way back down over here. So if we look at this last move that sort of came up through here, down underneath this zone here, back into the sort of 40s area, we've got big congestion over here. So this gives a reason why you probably see a little bit of support coming in around the zone over here. You've got this rising support, that's another area. And also, we know that the 61% generally is a fairly strong area for Aussie. So I would be looking, and I am actually short on Aussie at the moment, but I'm not looking for a big turnaround. I'm not trying to pick the top of the Aussie trade and get back down over here. But as I said, DXY I think has got a bit of a rally effort in it, and so in that I'm short with Aussie. And I'm not looking to sort of like trade this thing and back down to 63 cents. I'm not that kind of trader. I'm looking to maximize on the short term sort of flows of the market, and I do believe we've got a little bit more downside to come with Aussie. And ultimately, again, I want to get long. I want to be long because I do believe that we have new yearly highs to come with Aussie this year. So, I don't want to be holding shorts, fine, we break out on multiple time frames, and then be caught out sort of having to hold and sort of, take a loss or whatever. So, I do think we have a little bit of sort of downside to come with Aussie here, but we'll have to sort of wait and see. It's breaking a couple of little levels. If we get onto a smaller time frame, you can see that at the moment we had a little bit of support through here all of yesterday. So drag this area through here. At the moment, we're in backtest territory. Look, let's drag this just a little wider so we can see. Look, we've come into around the 38% of that last move. But look, this is the supports, breakthrough, retest. If you take out 61 now, then as I said, I think around sort of 40 is the price target that I'm sort of looking for. You get back above 76, this is considered a fake breakout, and then you're probably coming back up to at least the 87s. You know what I mean? Doesn't mean that it's going to fly all the way back up, but you just look, where were the sellers previously, and you'd see some sort of reaction here. And then this level becomes this level here. So you want to be able to break out and see depletion of sellers at this level, because remember, it tried to rally, come through here, sellers smacked it on the nose. Tried to rally again, sellers smacked it on the nose. And so sellers at the moment are in control because they've taken out. There were buyers here, buyers here, buyers here. The fact that it broke through here means there's no buyers here, unless it comes back up to the top here, and then that's, as we said, a fake breakout or fake breakdown, and then it'll come back up here, and that'll give us a liquidity grab to then sort of power on and move back up in the opposite direction. But we'll have to wait and see how that plays out. As I said, I'm still looking for a little bit more sort of cooling short term back into this little congestion zone, matched out over here around the sort of 40 to 50 zone, 67.40, 67.50 zones. Copper. Very, very disappointing for myself over the light with this one. So let me see if I can find this. Oh no, that's not the one, is it? I put this on X a moment ago. Where are we at? This is the entry that I had. Very disappointing. Right down here and missed by like, I don't know, 10 points. Something like that. Something ridiculously small for copper. As you can see, right back down into the zone. This is what I was looking for. If you watch the things, I've been sort of talking it all week. You want to see them move up from the bars up to this level here to say, look, we're not going to wait down here. We're going to move our buys up. And look at this, tapped right into it and bang up at the top. Look, I can't be too upset with this. Like I did sort of close my sort of last copper positions just up the top over here. So really I was just trying to sort of recapture the next part of that move. But when you see this big long wick like this and you miss by such a small margin, it's it's frustrating. It's frustrating to say the least. So anyway, look, not to worry. That's the name of the game. If we actually sort of look at what we're doing now, we are breaking out of this channel. It hasn't sort of fired out, but again, it grinded out to the side and now it's slowly chugging up. We're coming into an area which we've seen previously. This is going back January of 23, where market decided to sell it down. You can see a bit of congestion. There's a lot of congestion all the way through here, but a bit of congestion on the way up. It provided a bit of a support for this last push before coming back down here to the bottom. And so now we're finding, that this zone through here is going to be a little bit tough to sort of get through. Break through 434, and we could see a move back up towards really sort of 45. Excuse me, 450 or so, whatever, however you want to call it. At the moment, look, it's a little bit overbought. That little wick down like that isn't super bullish. Again, it's all dependent on where the candle is. The fact that you get these sell downs and then push back up, if this is a bottom of a trend, so for instance like this, or like we saw on the Aussie down here, see this big bottom wick down here? These kind of things at the bottom of a trend are bottom signals. When they're at the top of a trend like this, it makes a bit more of what's called a hanging man. And it kind of means it's sort of like, oh, they've sold down, they've pushed it back up. There's a high likelihood as well that we do see a rollover from this here. So I'm going to get rid of that order, as I'll do it right now. Oh, no, I've got to click it with the mouse. But get rid of that order, and then also assess how things look. But I think I could probably even get a little bit lower down here. Look, maybe this takes off and goes all the way up over here. Who knows? But as I said, a 500-point bounce is always nice to get if you can get it. But you know what, we missed it, and that's just name of the game. But yeah, so moving forward, I think sort of again the fact that we've broken out of this channel means that ultimately we are going higher. Though, if you remember way, way, way back this section here. This is why it's important to sort of, really know your products and that with it all. This was the yearly, monthly, wherever it was, what do you want to call it, going back to March 22. So this was a very high time frame. And if you look at this, where it broke out of here, yes, ultimately, end result, hindsight now we can see it, end result was it went higher. But it broke out and it just grinded sideways. Admittedly, this is a higher time frame, so the swings are much higher. But this is the kind of thing that it does when it breaks these things. It doesn't necessarily break and then just go to the moon. When it broke this horizontal back test and then went to the moon. But if we come onto here, this is obviously a smaller play than that was back then, but the point is still the same. So, the idea that, it's just going to go and then go straight to the moon, and if it doesn't go straight up, then it's doomed, doesn't necessarily ring true. So, we may sort of see a little bit of back and forth through here before eventually going here. So, for me, it just sort of means buy the dips on copper. If you get back into this sort of 414 area, into this zone, back test to the top side of this, buy them up. And for me anyway, I'm buying them up and I'm looking much higher up to that 45 kind of area. All right, flip across. We got China holding the lows as it does. Found its little grind area. As you can see, we've got this as a little smaller consolidation right down at the major lows down here. As I said, look, I don't think US dollar is going to catch a bid and be ultimate. I do think that we may sort of see a little bit of a rally. That can continue this little box that we got going along here for a little bit of a smaller range. But I think eventually when they say, yeah, we've had enough, and we see that next leg down on DXY, we're going to see the break on China. And the break on China, typically a stronger one is going to be better for the Aussie dollar. This will be the time that you'll see Aussie dollar will also sort of break and take out the highs. So we'll just have to just bide our time and just try and pick the entries as best we can with those. But I could see that we could potentially just continue this little grind here. I think the catalyst for this is going to be the FOMC. When they say, yes, we are cutting, we are cutting, when they actually cut, I think that's going to be the trigger to break everything. I don't think we're going to see the major breaks prior to it. We could, of course, you know what I mean. Market could sort of front run it, but I think there's going to be a little bit of a sort of lag with that. Finally, I'll just flip across. We got silver. I actually got off some pretty good silver. The last of the longs that I had, what was it? Around here, so 14, 16, 17, 17. So right near the top there, 17 it was. So where we hit 18 high. So I got mine off at 17. I chucked in an order at 83, I think it was. Well, it is, sorry. So yeah, just around here. So I'm just 2 points up or so at the moment, just to sort of get out of there to recapture this little thing here. I missed this little bounce. That's fine. I still think we have upside, but like everything else, I think we could have some chilling, some cooling to sort of happen in the sort of the short term. So I'm not too fussed on that. I think we do have upside. We've got that target so close now. I think that's really neat. Even if it is going to fail down, I think this is where they're going to take it up to sort of touch this big falling resistance through here. The longer it takes, the lower that target comes, of course. As you can see, it's coming down a little bit here, but it doesn't matter. I still think we've got at least where are we at? Another 60 cent move in this. And that's provided that we don't get a major breakout. Again, DXY sort of breaks through, they sell off the US dollar, they cut this, all that flow is going to go into something. If it goes into metals, silver is the place you want to be with that. So yes, that's moving forward there. So lastly, just have a quick look over the news, see what we have here. What we got today, 27th. So pretty quiet on the news front today. We've got CPI for Japan, I suppose, because they're so down, doesn't really matter. Well, it's not, no, it doesn't matter, but like it's not a big sort of talking point for them. Yeah, it's pretty quiet on the news front, so not really too much of a catalyst through there. Tomorrow's the one that we're looking at for Aussie. Aussie's a fairly large sort of tick down here, 3.8 down to 3.4. Now, I mean, the economists in Australia are just morons. Like, they don't have a clue. They generally miss everything. So I have very little confidence in this actually coming in at 3.4. They haven't done anything to change it, so I don't see why all of a sudden we're going to get such a mass. Like, it's a fairly large drop off, 0.4% there. So wait to sort of see what happens with that. If it comes in higher, Aussie's absolutely just going to rip. But again, if it comes in lower, well, that's going to see, as I said, coupled with if we do get a bit of a DXY push, a bit of a sort of a cooling on the Aussie dollar there. So we're seeing sort of things bounce back a little bit here. Aussie's just taking out its highs. Silver's got a little bit of a bounce going on here as well. So we'll see how this one sort of lasts. Where are we at now? 11:30, 11:27. So yeah, a little bit of volume sort of over the next hour or so, and then typical Asia sessions just kind of goes to sleep after that. So yeah, we'll see how long these bounces last and see if they can take out some of those previous highs. All right, that's it from me.